Thank you everyone for joining. My name is Charles. I'm the CEO of the DYDX Foundation, and we are very happy to host today November 2025 Analyst call together with some special guests from the Nethermind team, as well as some guests from the team from the DYDX Foundation. Before we get started, I'd like to thank as well Winnie for preparing this call. Thank you. As we usually do, we will go through different parts of the ecosystem reviews to give you an update on what's going on with the market backdrop, giving you some DYDX protocol metrics, as well as an update on the DYDX buyback. Nethermind will be also joining the call, as they are a very early supporter of the DYDX protocol. We're very excited to have them in and presenting all the work they've been doing with DYDX. And we will go also through different strategic initiatives which are illustrating the last month's activities around DYDX. Finally, we're going to close the call with a Q&A, but before that, we will also get an update from Arsh from the DYDX Foundation team in order to get an update on the DYDX grants. On the overall market backdrop, the on-chain derivative still runs the show, so to say. Despite some macro uncertainty, the derivative market still lets the traders and the market express their opinion. And definitely the on-chain infrastructure is showing some strong momentum. So the monthly on-chain volume at an industry scale has reached 1.3 trillion in October. And this is the highest level we recorded in the DeFi industry. So that's a very strong signal that essentially the derivative market are moving on-chain, and DeFi infrastructure such as DYDX is definitely part of the future chapters of this industry of crypto derivative. One very interesting, I would say, evolution of the market and market news we can double click on is CBOE announcing earlier this week that they will be essentially launching perps. So they use a different name, and they are essentially, in my opinion, kind of getting very widely inspired by decentralized finance and DYDX amongst others. So CBOE, the Chicago exchange, is launching mid-December 2025 continuous futures for essentially Bitcoin and Ethereum, which are the two main markets. And it's a very interesting kind of confirmation that traders and the market overall, should they be coming from TradFi infrastructure or DeFi infrastructure, value strongly perps, and CBOE is essentially replicating the success of DeFi perps into now TradFi. Let's go into the recent milestone and roadmaps.
So DYDX has been around. It's pretty much the OG perps DEX. And for that reason, we can see that the lifetime volume across all protocol versions is at 1.52, I believe it's 1.528 trillion as of today. And the protocol fees generated since the chain's inception in November 2024 is currently sitting at $63.4 million. Listed markets on DYDX today are 240, with the possibility to permissionly list whatever markets that you would be interested in listing. All you need to do is deposit a small amount of USDC, and you would then be able to launch whichever market you'd be interested in trading. And then when it comes to DYDX token holders, they are currently sitting at 96,200. This number is very impressive. It might seem like a small number compared to other protocols, I guess, but this is not the number of token holders across all protocol versions. This is just since the inception of the DYDX chain, which launched less than or about a year or so ago. And so it's a pretty impressive number to have 100K token holders already. And then in terms of staking rewards, $49.2 million have been distributed to people who are helping secure the DYDX chain and help with the verification of the transactions that are being processed on DYDX. And the number of stakers as of today also sits at 33,800. We will move to more granular stats that you probably would care more about. And Charles, I guess you can take the next slides.
Thanks a lot, Winnie. So let's double click on monthly volume. Over the past 30 days at DYDX, close to $10 billion, $9.32 billion of trading volume has been recorded. So that shows really a consistent growth from August to November. And despite a lot of complications on this market, DYDX have really demonstrated a sustained recovery from the mid-year lows, as well as higher volumes from the early 2025 baseline. So we are very satisfied with this kind of behavior of DYDX, the protocol, despite this complication. And it also shows that some of the initiatives put in place via governance, such as fee holidays or integration with distribution partners, have shown momentum and has essentially helped to keep the volume growing. Let's double click now on the DYDX tech supply. So as per November 11, 2025, 246 million DYDX are being staked to secure the network. This represents about 30% of the security supply. The upcoming launch of the staking via the UI will help to see this kind of proportions growing. And we are also excited to see what will be the effect of the launch of the staking-based fee discount for traders, where essentially traders will be able to get lower fees when they trade, depending on the amount of DYDX they are staking. This also has been enabled by governance a few weeks back. Regarding the buyback, it's a program which is very close to many of the analysts joining those calls and many token holders and participants in the DYDX ecosystem. This program is constantly making progress. There are some news also we'll cover in the later stage of this presentation. As per today, more than 6 million 27 DYDX has been bought back, which brings a market value of about $1.7 million US. And as per a few days ago, 25% of the protocol fees were dedicated to buyback. But this has changed, and we'll cover this later in the presentation. I'd like to invite our friends from Nethermind to introduce yourselves. Thank you, Thomas and Joel, for joining. The floor is yours to introduce Nethermind, introduce your connections to DYDX, and also what has been keeping you busy over the past years.
Thank you very much, Charles. Highly appreciate it. My name is Tomasz. I'm a head of DeFi and enterprise business at Nethermind. DYDX and Nethermind have been partners for over 2 years right now. So far, we have completed various projects, including Rust and Python trading clients, which are used extensively by traders across the globe. Also, recently, we have worked on the DYDX and TradingView integration, which just adds to the institutional adoption of DYDX. TradingView is one of the most commonly used tools for brokers and traders worldwide. And also, we have supported DYDX on technical documentation, dev support, and various maintenance items. We have completed the DYDX revenue share tokenomics design and implementation, which Joel elaborate on. The impact has been meaningful. We have received great feedback from the users and traders that the improved clients provide for better user experience as well as adoption. And going forward, we are committed to supporting DYDX on their institutional adoption and readiness journey. Looking forward to have more years to come as great partners, as we are both aligned strategically and operationally. Off to Joel.
Okay, so now we're going to present you the new revenue shares that was put into place and voted last week. So we look at the allocation. There's a big emphasis in buybacks. So you can see that the share of buybacks has risen from 25% to 75%, whilst the allocation to megavolt, stakers, DAO, and treasury has been decreased. So now, next slide, if we can see why accelerate buybacks, I think it seemed to us like an opportune time to accelerate buybacks, and this for several three reasons. First reason is that the price of DYDX token has been quite depressed. I think it's decreased more than 50% since the last revenue switch allocation was put in place in March. And this fall in price is despite strong fundamentals and a reduction into the inflation of the token. And also, given the current price levels, we believe that by putting buyback to 75% at current price levels, we could buy back up to 5% every year of the whole token supply. So this would be quite something exceptional when you look at other competitors to have like 5% of your supply being bought back every year, and also would provide a very strong support for long term to the token. And also we've looked in terms of sentiment of similar buyback programs, which have been to place by other tokens and competitors. And we've noticed that this kind of buybacks gives a strong signal and a sentiment signal to the market. And on average, we noticed a performance of 14% of the token price.
One of the initiatives that the community has been working on is the Trading Leagues competition. I actually just published a video with CLC. They are a DYDX validator, and they are the team behind this competition. It is essentially a new pilot program introducing performance-based competitions for non-API traders. Rewards are distributed based on realized P&L and not trading volume, although the aggregate trading volume will influence the amount of rewards that each trader will receive. And essentially, the goal is to align incentives towards skill-based participation and disciplined trading behavior as opposed to farming. Up to 250K in weekly rewards will be up for grabs this month. This will be complementing Surge Season 8, which continues to incentivize overall activity on DYDX, which brings me to my next point, which is Surge Season 8. In November, Surge will be essentially offering 50% trading fee rebates for all traders and a 1 million DYDX prize pool for UE-based participation. And by UE-based participation, I just mean the people who are trading on the front end. So this is dydx.trade or the iOS or the mobile app. And like I said, combined with Trading Leagues, both programs are aimed at strengthening trader retention and, just making it fun for people to want to use and participate on DYDX. Another initiative that is really, really cool, and I've been using and abusing personally as a trader on DYDX, is BTC and Sol fee holidays. So this is actually informed by research by Nethermind, who are on this call today. And essentially, the community passed a proposal to temporarily have fee-free trading for BTC and Solana perps through November. And it's been very interesting to see that this initiative has actually led to Solana overtaking Ethereum in trading volume. And also we've seen a huge uptick, generally speaking, in the trading volume on DYDX. I think it's up 2 to 3x the typical numbers that we've been seeing from around mid-year. So yeah, this is a really, really cool initiative. And I do not believe it will be permanent, but for now, we can definitely see a direct positive correlation between trading volume increase and the fee holidays on BTC and Sol.
Thanks a lot, Winnie. Another initiative which was went live a few weeks back now on DYDX is the Fiat and Ramp integration with MoonPay. So what it means essentially, I think there is a video to play, but so it's a very smooth integration with Apple Pay and Google Pay, allowing essentially traders to fund their account on DYDX very quickly and very smoothly via directly connections with Apple Pay and Google Pay. So a great new feature brought to the users of the protocol. The next update is regarding the affiliate program. The affiliate program has been updated. It has been very successful over the past 30 days. Close to $8 billion of trading volume was brought by the affiliate program. So congratulations to all the affiliates of the DYDX protocol. Some of you are really champions and kind of competing every week or every month to basically rank higher in the affiliate systems and ranking. This system has been popular. It has been simplified to essentially onboard more and more users. So all the affiliate gets 30% commission on the business they bring from their community, and the highest volume affiliates can earn up to 50% commission on this volume. So this makes essentially DYDX one of the most attractive and rewarding affiliate program in the world of trading, and that's something which is definitely catching attention, and where the protocol wants via governance to keep kind of doubling down on this winning initiative for the protocol. We also worked on the prediction market at DYDX over the past weeks. You probably have not missed that the prediction market were back on DYDX after a first experiment close to a year ago. They came back this time on the baseball front with the Toronto Blue Jays and Los Angeles Dodgers a game which was essentially offered to the users of DYDX as a wrapped prediction market, which where users were able to essentially go long or short and add some leverage to the prediction market. So it's really part of the initiative of innovations at DYDX, where the teams involved are always looking at new products going beyond the usual suspect of the crypto asset class, but exploring a real-world asset, and here with prediction markets. So stay tuned for more innovation, but that was a very exciting moment for the users of DYDX to be able to trade a real-world event and following the sentiment of the market around the outcome of this game. As you've been following us over the past years, DYDX is always looking at enhancing its distribution. The goal behind that is to essentially bring DYDX where the users are. And the protocol is very happy to celebrate a new distribution partner in the name of CCXT, which is essentially another router revenue share partner. So CCXT will bring DYDX to its thousands of users which are trading via this unified API CCXT offers, and they will be essentially enabled via a governance vote which has been passed positively to get 50% of the share. So this is a very good complement, and I will say built on the CoinRoots integration which was mentioned to you in this call last month. I'd like to invite now our colleague Harsh from the DYDX Foundation, part of the DYDX Grants program, to give us an update on the DYDX Grants program.
Hey everyone, I'm Harsh, and I recently joined DYDX Foundation to lead the grants program. The foundation took over grants in mid-August to improve the operational efficiency, accountability, and impact tracking. The community approved an $8 million raise, funding the program to support 3 key ecosystem pillars: infrastructure, growth, and research. Within the first 3 months, we're happy to announce that DYDX Foundation, through its grants program, has delivered $2 million in annualized savings through contract renewals, like renegotiations and terminations based on impact assessment. I would like to now highlight a few of our recent initiatives. The program recently funded the Order Entry Gateway Service, OEGS, a core infrastructure component enabling low latency and fair access trading. Free deposit program has enabled fee-free bridging to improve onboarding experience and to attract capital to DYDX platform. Grant-funded research enabled fee holidays, as Vinny had mentioned, on BTC and SOL in November, driving the volumes by 2x. We aim to focus on initiatives that ensure network stability and that help grow the exchange user base, volume, and fees. Thank you for the opportunity to present DYDX Grants Update, and I look forward to participating in future analyst calls to share further highlights and progress. Thanks, Charles.
Thanks a lot, Harsh. It was great to have you presenting the beginning of the DYDX Grants program within the foundation. Keep pushing the ball forward and also enhancing savings for the protocol. Already $2 million saving annualized. So congratulations for that, and we look forward to your upgrades in the coming months. Thank you so much, everyone, for joining. That was the DYDX Analyst Call for November 2025. See you on the next session. Thank you for joining.